Well, Canadians have been braced for this for months now, and today, confirmation from Statistics Canada. The economy did take a big step back in the spring quarter. In fact, the last time the Canadian economy shrank this much was all the way back during the global recession of 2009. Jeannie Lee is here with more, and we spoke earlier this week. We were expecting a contraction.
Right.
How does this really shape up to those expectations?
Well, it is quite a fall, Lindsay, especially when you consider that in the very first quarter of this year, things were in growth mode, and solidly so. So, gross domestic product shrank by 1.6% on an annualized basis, which is worse than the 1% rate of contraction that the Bank of Canada was expecting. So we'll show you this chart. It goes back about 2 years. It shows the economy growing in early 2014, but then the oil price collapse kicked it into that mild recession. Those two bars there in the middle of the chart shows the mild recession of early last year. Things started to recover, and then the last bar, which shows the contraction of 1.6%. That is the worst showing since the 2009 global recession. And it's because what was happening in the spring quarter, that wild event called the Alberta wildfires. So here were some of those factors that dragged down the economy. The wildfire, of course, burned Alberta's economy, especially because of the evacuation of Fort McMurray, all of the lives disrupted there. And that also shut down a lot of oil production, which brought down the value of Canada's exports as a whole. And as it turns out, business investment had another dismal quarter. It's been shrinking for 6 quarters in a row, and you need business investment for strong overall growth. But again, the one big factor was the Alberta wildfire. In fact, StatsCan says it alone cut gross domestic product by 2 percentage points. And that means that if you exclude that wildfire, that one event, the economy might have managed a little bit of growth.
So how are the markets responding to this?
Well, today the markets are responding mainly to the fall in the price of oil, and that is happening because there is much more oil on hand in the U.S. than expected. We'll get to that in a moment, but you'll see the effect on the TSX Composite, a drop of 89 points, the Dow Jones Index off by 60, and the NASDAQ market losing 13. Second line shows you the story of oil down about, well, I would call that $1.45 at the moment, but under $45 a barrel, and that has pulled down the Canadian dollar to about 76 cents and change.
Thanks, Jeannie.
You're welcome.